Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, December 8th at the market's close. Well, U.S. stock indexes closed higher today with strong gains from NVIDIA and Meta platforms after a robust U.S. jobs report fueled investor optimism about a soft landing for the economy. We'll take it. Investors paired bets that the Federal Reserve will cut interest rates in March after a Labor Department report showed non-farm payrolls increased by 199,000 jobs in November, compared with an estimated increase of 180,000. So on that bit of good news, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Well, we had a great day today. The SPY closed today at $460.20, right over here. That is only now 4% lower than its all-time highs at $479.98 in January of 2022. Now, this $460 high is shy just a few cents higher than the July July gap open right back here. It's just a little bit higher than this, so it managed to close up over that. I'm sorry, it's shy just a few cents. The intraday high at 459.44. Also, we do have price resistance highs, and you can't see it on this chart, from March 2022. You can see that on a longer-term chart. So we're starting to bump up against longer-term price resistance here as we close in on that all-time high, again, back at 479.98 back in January of 2022. So we know here that from right here, this July high right here, we know that the SPY dropped in what I'm going to call a reluctant downtrend. We had lower highs, lower highs, lower highs, lower lows, lower lows. But it was a reluctant downtrend because it would fall down and then try to really come back even more than it, back up to its midpoint, then fall again, struggle to make a higher high, couldn't do it, fall back down to the 200-day moving average, struggled to move back up, got hit on the head, couldn't do it, and it dropped finally to its October 27th low down here at $409.21. I mean, all in all, it was an 11% drop. What happened, and we talked about it last week, that interest rates, and we didn't talk about this part of it, interest rates started rising in May of 2023, and in July, they started rising interest rates. I'm just doing a kind of a little diagram here. In May, back in May of 2023, and as it moved into July, it made a move like this, interest rates, up and then back down. But this July pop is what scared traders right here, because this obviously is the July high right here, gap up, fall down. Right at this point, we're saying, oh my gosh, interest rates are really rising. So that takes a lot of traders to go sell short or start selling a bit, and that sent, all in all, our S&P lower. That pop, even though price in this uptrend came back down to where it started briefly, and then it kept going up, but that pop there is what made this start lower, at least had a big part of it at any rate. So the market got nervous in July, fell to the low at 409. I just mentioned the October lows. Seems like everybody had an October low this year. But then in October, toward the end of October, interest rates started falling, which drew investors back into the market. So from the 409 low, the SPY moved back up really fast, up through the 200-day moving average, through the 20-day, which had fallen below the 50-day because price started up so fast. Of course, there's some short covering in here too, but buyers came in quickly, then moved up over the 50-day moving average, walked along this for a few days, and then popped back up in November. And then even I was looking here at the, I was looking at the gap up here. It gapped up right here at about 440 in November, gapped up higher, and then kept on going, and to where we are now at $460.20. So we have support here from this 460. We have support here at the September high, back here in 453, 451. We've got support at the 20-day moving average at 453 as well. A little more support here, a little higher in August, and quite a bit here along this consolidation line, because price has been consolidating about for the last 2 or 3 weeks, trading weeks. So we're just above the 50-day again here at 453.20. The bottom of this consolidation is at 455. So depending on what happens next week, of course, we have the Fed announcement that they're kind of boxed in by today's employment reports or unemployment reports. So that's good. So we've got a lot of price support here, potential price support should the S&P start to drift lower a bit. And we do have to take into consideration here that the 14-day RSI has been overbought for quite a long time now. It started, the RSI started dipping a bit in the past couple of days, but we'll just have to see here. You know, who knows? Maybe we can go higher. With the steep run up we had here, price had to start consolidating a little bit and endure a bit of profit taking. But at the moment, the buyers are buying a little bit more than the sellers are selling. So we have a slight edge here to the upside. So again, trade wisely as usual, and please keep your stops in place. Our next chart is the Invesco QQQ, symbol QQQ. This represents the top 100 non-financial companies by market capitalization in the NASDAQ 100, including companies like Apple, Meta, NVIDIA, Alphabet, Tesla, that whole group. Now, the Qs closed today at $392.17. Also just 4% below all-time highs that the Qs made in November of 2021 at $408.71. Of course, you can't see that on this chart. Now, you all know that we enjoyed a wonderful uptrend from the beginning of the year up to the middle of the year. Up again, we're back up to that July high here that everybody seemed to make. We made that high mid-July at 388. From then, we had even a downtrend, but even a more reluctant one than the S&P 500, because tech stocks have, you know, they're remaining pretty popular here. So we did make lower highs here. The lows weren't as low, but then if you keep drawing this trend line, price broke below the 50-day, the 20-day, down below this trend line, and down to the October 26th low at $342.35, just above the 200-day moving average. Again, right here was when interest rates started a bit lower. Buyers came in. Of course, we've got a bit of short covering here too, so the shorts are selling. The shorts are buying, the buyers are buying, and that helped move the QQQs up off that 200-day, back through the 20-day, back through the 50-day, and then actually gapped up here on November 14th, the SPY gapped up too, to open at $383.71, and that was climbing over the prior highs from July and August, and right up here climbing over this high as well from July. So it popped up to here to the 383, then started kind of trying to move up here, but couldn't really go much higher. This was a big move up, so it started coming back down. So we have pretty much of a consolidation here between 383 and 394. Now today we had a good closing here at 392.17. On the next long-term, on a long-term chart, if you look at one, the resistance is the November 2021 high we talked about earlier, and that's like the all-time highs. So we're real close to the all-time highs here. The Qs are sitting on top of the 20-day moving average at support. There's more support here down at the 20-day moving average. Of course, that's real tight support at 387. There's more support at 378 down here, 379, 380, all along in here. There's a bunch of potential support. So the coming week's price action is going to be very important to see what the Fed says. Hopefully nothing. And we've got a lot going on. So again, be careful. Next week's price action is going to be very important to the Qs to see if it breaks higher here or if it decides to go, as I said earlier, into another little rest stop. So stay tuned. Our final chart today is a daily chart of the iShares U.S. Pharmaceuticals ETF, the IHE. It has 34 holdings. Top holdings include Lilly, Johnson & Johnson, Merck, Zoetis, and Bristol Myers Squibb. I looked at many charts today of ETFs. A lot of them are very overbought, so I'm trying to find something that's a little more reasonable. And I like the pharmaceuticals ETF here. Now, the IHE closed today right under its 200-day moving average at $178.32. It is trading above the 20-day and the 50-day moving average. Now, you can't see it on this chart, but the IHE made an all-time high at $202.77 in April of 2022. Now, knowing that, so we've got that in mind, if we look on this chart right here, we see a triple top here that I think you can see, made in August and September of this year. We can see a triple top. That's pretty tough. Triple tops are at about $191, $190, $191. That took it lower, and it fell pretty hard here, back down through the 20-day, the 50-day, and the 200-day moving average, then tried to move up here, couldn't hang, and moved down to October lows here at 166. Now, it rallied from there. It fell really hard here, and look at all the volume that came in here. That's always a sign of something. When that volume comes in like that, you maybe don't want to buy it, but you sure do want to pay attention. So price fell, the IHE fell to October lows at 166, then rallied from there in the first week of November. And again, everybody had October lows, but then interest rates started to change and to go lower. And the IHE rallied from there in November to 100, up to 175.50, back down to make a higher low in November at $168.37, and that was good. This is a higher low than the last one. Then it climbed to where it is now, just below the 200-day moving average at 100, again, 100. The 200-day is coming in at 178.71, and price here is at $178.32. So what I'm going to do here, I'm going to keep an eye on the IHE. If in the coming week it climbs above the 200-day moving average, I'll call it 179 if it makes you anything easier, but right now it's at 178.71. If price can climb above that 200-day moving average, I'm going to add a small position to my trading portfolio with a stop down here at $174.50. That's below the 50-day moving average and below this pivot here. If and when the IHE, if we get into it and it climbs over 182, which is just above this pivot here, and stays above it for 3 trading days, I will add to my position and trail my stop by then, of course. So you may want to keep an eye on the IHE in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. Everybody likes that. If you'd like to learn how to swing trade, check out How to Swing Trade Successfully, a very good talent to have as a trader. If you want to trend trade, Trend the Trade to Profits is really good. How to Read Charts, great for novices and everybody else. 3 Winning Setups, great for short-term traders. And one of my favorites, How to Bottom Fish Like a Pro. I like to buy low and sell high. These programs will show you how to elevate your trading skill set and how to increase your gains quickly and easily. They are timeless. Check out all of my online training courses by going to the link on this screen right here, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market.